Today, we're talking about something different, retail.
Having a certain allocation to cryptocurrencies improves your portfolio all around. And so far, meme coins haven't really passed our due diligence. And I think we really have a good chance here as Post Finance in the digital asset space to be one of the leading banks.
550,000 trades. That's how many crypto transaction Post Finance customers have executed since the bank launched its digital asset offering less than 2 years ago. More than 36,000 custody accounts have been opened in the meantime. And here is the kicker: 56% of those crypto clients had never used an investment product with the bank before. Crypto as a gateway to investing. For a Swiss financial institution serving 2.5 million customers, that's not a side project, that's a strategic shift. Welcome to Beyond Infinity. I'm Andy Flury, I'm founder of Wyden. In the show, we sit down with the people shaping institutional digital assets, the builders, the operators, and the decision makers making this ecosystem real. Today, we're talking about something different, retail. Specifically, how does a major regulated financial institution think about bringing digital assets to the mass markets? Not just as a trading feature, but as part of a long term investment strategy. If you find value in these conversations, please hit subscribe. Post Finance has moved very fast. They were one of the first to offer direct crypto trading in 2024. They added staking in early 2025, and just recently they expanded to 22 cryptocurrencies, including a USDC, the first stablecoin. And then they did something no other Swiss retail bank has done. They launched an e-asset management mandate with a built-in 5% crypto allocation. Crypto inside a managed portfolio for retail customers at a minimum of 5,000 Swiss francs. And they just won Best Asset Manager 2025 by Bilanz magazine. Joining me today, Alexander Thoma, Head of Digital Assets at Post Finance and winner of the 2025 Asset Award in the Digital Asset category. Alex, welcome to Beyond Infinity. If you like, please tell us about yourself and your role at Post Finance.
Hi, Andy. Thank you very much for that very nice and flattering introduction. Yeah, that was very mouthful, but nonetheless, I'm very humbled by that. So thank you very much. Yeah, what can I say about myself? So basically, you said it's a podcast with decision makers, builders, and operators, and I think of myself as a little bit of everything of that, right? So yes, so I am very fortunate to have been part of this, let's say, endeavor within the bank from the get-go, right? When I came to the bank in 2020, right around the start of COVID, yeah, there was pretty much nothing really there in the operating side of the bank. So we looked at cryptocurrencies or blockchain technology more broadly, more from an innovation side, not really integrated into our strategy or operations or asset management. So it was completely basically a satellite, so to speak. And my job was then to bring the whole thing into the main bank, right? And accompanying that was a large shift, as you said it, in how we think financial markets will work in the future, how we as Post Finance will operate in that market, and what our customer needs will be in 10, 20 years from now. So there was a whole strategic analysis accompanying that, a lot of educational work with management, upper management, as to how this technology behaves, what the risks and chances are of this technology, and how we think it will change banking for the better, right? And how, whether we like it or not, we will have an impact of this technology on us, and it's better to be in front of this than lagging behind. This is what basically our approach was, and so we made a very strategic decision where we said, okay, we want to go into this market. We're going to start with cryptocurrency trading and custody. We're going to have a live roadmap where we have certain stages. You mentioned two of those stages before with staking and integration into asset management, right? And basically, as a building block for one of the core reasons why we did that, that's the building of know-how across the entire organization. So not only did we satisfy a client need, and we did have a large client need. So we had many clients asking us for crypto trading. We saw that they transferred money to cryptocurrency exchanges, etc. Right. So we not only solved the client need, we brought the whole technology in the bank. Plus, we built up know-how along the entire organization, which already has and will in the future help us when it comes to handling this technology and setting up us as a bank the right way for what's about to come with this technology. When I look about tokenization, when I look at everything that happens in the payment space, stable coins, deposit tokens. So we're very active there as well because we think this technology will be one of the, not the, but one of several key technologies in the financial industries. So we have to be ready for that, and we want to be a shaper rather than a lagger. And we have, we think we have a lot of innovative power in this area that we can bring to the table and really shape this.
Yeah.
And this is why having basically the recognition that you mentioned as most innovative person really, humbles me because it recognizes basically the, you know,
The work you did.
the work I did. Yes,
Yeah.
exactly.
Yeah.
The work we did as a team. It's not
as a
just me,
as a
right? It's a whole
financial
team, right?
institution. Yeah,
Yes,
and I
and
mean, I think post finance plays a quite a unique role as a systematically important Swiss retail bank. You're reaching roughly a third of the country's population, so you're definitely not your typical crypto startup. At what point did this move from sort of an interesting innovation project into a strategic
mm,
priority? I'm guessing that was quite the process. You're a big institution, you're located in
mm,
Bern, where things take a little bit longer. Joking aside, looking back, what were the key inflection points that turned digital assets from an experiment into a
mm,
live business and a technology that you believe is going to be important for
mm,
your organization? For those of you that don't know,
yeah,
Post Finance is the largest payment processor in Switzerland today. So cross-border, stable coins, all these payment-related use case, I'm guessing they're going to be quite important for Post Finance in the future.
yeah. So good question. So basically, it all came down to this strategic alignment with the upper management and the whole bank, where we really said, okay, let's now make a deep dive. And this lasted 6 to 9 months, right? This whole deep dive. And the goal of this deep dive was bare bones and analyzing digital assets, defining what this actually means for us, the technology, how it will impact us as a bank, and what our plan is, or what our option space is, basically, how we can go about the future. And the basically sort of the eye-opening moment was, there were a few, but one of them was, that's pretty funny actually. One of them was basically, uh, yeah, I mean, we educated people on that, but we had to hammer it down a few times, right? So it always takes a little bit of a time to explain everything, and so people really stick with this. So we had to explain certain things a couple of times, even though the main message didn't really change. We just we just explained it a couple of times, and so after maybe the third or fourth time, it made click somehow. So I guess that's just human nature, right? But for me, I will never forget that moment when I thought, okay, now it really clicked, right? It clicked with the CEO, it clicked with the CFO, it clicked with the chief risk officer, right? The moment I saw it in their eyes and I heard it in their voice that they really gained confidence, that they understood why it is important we have to talk about this, um, because if we don't, we're gonna run in a problem. So of course there were always doubters, right? But it was really important to get that support top down behind that. And what was very important for us also, and it really took off with that, was that before I came, the focus on this technology from innovation side was largely on tokenization and payment use cases. But I've been in the space now since 2017, and when I look at the landscape back then, tokenization and payment use cases were just in Switzerland not that fruitful. Meaning you would have to have
And
a
they're still not today,
yes,
right? And
you
tokenization.
still need a long, deep pockets. You need to be patient. It's not, those are not the use cases, or back then those were not the use cases where you can make a very good business case, where you are very confident that you can, you know, reach break even in a certain time frame and have a good, a good return on your investment. So
Would you still say today that retail, crypto is the only real revenue case we have today?
no, it's not the only one, but it certainly is still the one, if not the, then one of the major ones. I'd say, right back then, I looked at it and then I said, okay, we're not getting anywhere, because the main bank, basically the run the bank side of the house, has 1,000 things to do, 10 projects that they are currently working on, and 10 projects that they're about to start, right? So, and now here comes Alex telling them, okay, we need to look at tokenization. And then they say, okay, good, but what's the business case? Why should I prioritize this over this, and this? So there's no way, right? So what I had to do is basically find a strategy where we do something that lets us earn money pretty right away, while doing everything else on top of that. Basically, uh, basically paying for everything else. So this is why I said then, okay, let's shift our focus. Let's shift from payment use cases and tokenization to what pays the bills. Let's look at cryptocurrency trading. And then we started analyzing, okay, how many outflows do we have to cryptocurrency exchanges from our accounts? Then
Did
we
that
looked,
did that have an impact? I
that had
assume
that
that
had a huge
that
impact. Yes,
number must have been quite big, as with many other banks, when they
yes,
do that exercise.
that
That
number was significantly larger than the management expected it to be. That opened some doors, I can tell you that.
What
And
about the
yeah,
actual demand from your customers? Is that visible? Do you
yeah.
hear that? You don't have
So we got
um,
curious. We got,
offices where you
yep.
can walk in. So do you have that direct interaction with your
So,
clients where you hear that they really want this new asset class?
so we had that in 2020, 2021 already, certain specific client feedback, but we have it now as well, right? As you said, customers are walking in the door, they're calling us, they're writing emails, they even write me personally on LinkedIn, or somehow my phone number is out there. I don't know how. Someone leaked my phone number. I don't know why and who did that, but my personal number is out there, and so people are calling me and texting me. Yes, I need to get a new number, by the way. No, jokes aside, but that's actually true. My phone number is really out there. So we have client interactions now, and we had it back then. So what we did was we looked at the outflows. That was the first thing. Then what we did secondly, we talked to those guys that made those outflows. So systematically, we made a very large inquiry with all those customers that made all those outflows the last 3 years. So like 2021, 2022, 2020, 2019. And we basically asked them, hey, why do you transfer money out? What are you doing? What is your need? Why do you need to transfer money out? And okay, let's say if we make a product like this, would you do it with us? So what would we need to provide you that you would trade with us? Stuff like this, right? I mean, so we did that. And that gave quite an impression, right? Then we knew exactly, okay, good. We have a very large um, feedback from clients. We have those outflows, so we can directly calculate basically how much revenue we lost with that. And then it became a business case. And then all of a sudden, the run the bank side of the house was interested.
Yeah. I mean, look, you're probably one of the best examples in Switzerland. The retail interest in crypto is known to be moving faster than institutional and traditional
Mhm.
banking infrastructure. You are serving millions of customers, not just a few 10,000 wealthy clients. So how does Post Finance balance this client demand with the operational and governance standards that you have to have in place as a systematically important banks? Where have you been maybe more cautious? And where did you deliberately decide to move quicker and
Mhm.
faster just because you saw the opportunity?
So we don't offer trading in all currencies that we could probably technically. So we do have a certain process as to which currency we allow our clients to trade. And famously absent from that list, when you look at it basically as an example now, is for instance meme coins. So far, meme coins haven't really passed our due diligence, if I may
And
say
it's
so.
gotten a little quiet around meme coins since the initial
Yeah,
launch, right?
yeah,
It was a
yeah.
short wave. I'm guessing it was, now looking back, it was probably a
Mm,
good decision not to jump on
hmm.
that train.
Yeah, we really thought, and it was our own also, you know, it was our decision then to say, okay, we are also responsible for what we give our clients to trade. It's an execution only product. Don't get me wrong, right? So they make their own decision, they make their own research. Um, the execution only product, but nonetheless, we do have some responsibility morally, etc., where we just say, okay, we cannot just give give them anything regardless of what it is, and we have to have some kind of quality standard, right? So we have made a whole process out of how we look at currencies and what we take in, when do we have to take something out, what happens when we take something out. So this was for us, it was new. Of course, we have it from the traditional securities also. There, something can happen where we have a delisting, for instance. But for cryptocurrencies, we made a whole new elaborate scheme and an elaborate process how to handle this. We call that coin life cycle, because it basically tracks the whole life cycle of a coin, from analysis to the decision we take it in or not, to tracking it, to delisting it, to what, it's the whole life cycle of the asset basically with us. And so there maybe we are a little bit more stricter. I wouldn't say risk averse, because I don't think it's risk averse would say, okay, we're just a little bit afraid, right? But it's not that we're afraid. It's just I think we're just more responsible.
Yeah, and it also shows the quality of the service, the
Yeah.
reliability you're trying to provide to your customers. Now
Mm.
let's talk about your newest product, the recently launched e-asset
Hmm.
management mandate. That's really a first in Switzerland, where you integrate crypto into a managed retail portfolio. I mean, that's
Hmm.
that's really innovation. Retail managed portfolio plus crypto. That's a really significant step. What was the strategic rationale
Hmm.
behind putting actively digital assets into a managed
Hmm.
investment product?
Yeah, this is now an example where I think we are ahead of the market and are maybe a little bit more, yeah, progressive, huh? as a first mover, where we just said that, okay, we believe there's true value in having a part of your diversified portfolio allocated to cryptocurrencies. And it's not just that we just say that like that. We also looked at it very heavily from a portfolio management standpoint, and really it shows that having a certain allocation to cryptocurrencies improves your portfolio all around. And I mean, that's historically right. The disclaimer, it's not future proven, right? But even though we have a certain length of time series, which is frankly too short to increase that allocation even further, I think we're now very comfortable with what we have. Given the data we have a 5% allocation. We feel very comfortable with that. It improves the portfolio in its efficiency, meaning you earn higher risk-adjusted rewards. It helps with diversification, etc. Right? So
But
the very
it's a progressive step. I
yeah,
remember
it
the
is.
Yale University published a report, and I think their recommendation was 5%. Now that
Hmm.
was more a theoretical recommendation. Now you're actively going to the 5%. You're not just starting with 1% or
Hmm.
2%. Like it's 5% right away.
Hmm.
That's pretty radical given you made the comment around the time series. I mean, crypto is not that old, 15 years plus minus, right? With a very volatile regime at the
Hmm.
beginning, with very little correlation to traditional markets. Now it's getting a little less volatile,
Hmm.
more correlated. So we're in a different regime now. So I think given that it is a very bold move with the 5%.
Hmm. I take that as a compliment, by the way, because I think we need bold moves in the financial industry. It was time to do that because we think it's just consistent with the whole story that we tell anyway. For us, the story doesn't end with an execution only product. We believe that it should be part of a diversified portfolio for certain risk classes. Obviously, it's not for the most risk averse investors. You need a certain risk taker basically risk taker status with us. But if you are in the certain risk category, you are allowed to choose that mandate. You're not forced to, right? We don't force anyone into this. But we believe it's time that we launch this, and it just fits nicely into what we have done and into our entire roadmap. And like I said, we have those stages, right? And it's all built upon each other. It's a phased approach, a very modular, very well thought of. And that's another thing that me and my team we did over the last couple of years. We really gave this bank a blueprint how to conquer this market. So now it's on us to follow through on that. And I think we really have a good chance here as Post Finance in the digital asset space to be one of the leading banks. Because I
And
think,
it's
yeah.
and you're moving beyond execution only. I think
Mm.
probably about 50% or so of the banks have some sort of execution only crypto offering. That's one thing, but putting that in a mandate where basically you are taking the decision for the client on an active basis,
Hmm.
that goes beyond. That's what most banks have been holding back on. So I'm,
Afraid
I'm
of,
really
yeah.
curious how that offering is going to evolve. I
So the
think it's
start
going to
the
be
start was good. The
was
start
good.
was really good, very encouraging. Yeah. Even though it's only in the highest risk category, right? As I alluded to, we're very encouraged by the start actually, which is a good sign for us. Even though obviously market side, it's a bit of a yeah, the situation on the markets is not that easy right now for expansion. Obviously, there's a lot of uncertainty around. People are afraid of all-out war in the Middle East. So it doesn't really help right now where we are, obviously. So, but we're very encouraged by the numbers. I can tell you that. So
I
there
think
is
it
it.
has the market situation has also an upside. It's maybe we're not at the all time high.
Mhm.
We're back at maybe 45
Our
percent less, but that gives a bit
our
of
yeah,
time.
our happiest clients are the ones that started investing with us in the friends and family phase in
Yeah,
September, no, in November 2023.
yeah,
Then there was Bitcoin was at, I think was at 36 or so,
yeah.
36,000. So those are the those are the best clients. The happiest clients are the ones
That's
from the
it.
friends and family phase because they are deep
I mean,
deep
we
green.
we we serve, as you know, many banks around the globe, and in our experience, when launching a new product, and talking about this new product that you launched, the e-asset mandate, it's always good if you're not at the all-time high. If you're a little bit back, markets are a little bit calmer. That gives you
Mhm.
the time to get familiar with the new product, for your clients to be familiar. So I think you're in the right position. And this market is volatile. It has its moves. So the next bull run is gonna come. We're all confident on that one. So I think that's not a bad thing. Now, if we look a little bit ahead, digital assets are obviously becoming part of mainstream retail financial infrastructure. That's clear. Looking 3 to 5 years out, how do you expect Post Finance's digital asset strategy to evolve? Do you see managed products like the e-asset management becoming the primary access for most retail clients, or do you see that is it more on the standalone trading, or do you see
Mm.
additional services that might become interesting for the bank?
I think the execution only product will remain the main line, service line, because of the because it 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 tracks probably the client need the most right now when I look at the numbers. Um, I think we will have an expansion on the asset management side, because given market development, I think it will take it will you know it will just take a little bit of time, but it will grow steadily over time. And I'm very confident over a certain market cycle phase. We will have very encouraging development and growth. Um, what's more is what we're currently working on. I see also growth from yield products. So we're currently expanding our staking operations. We will redesign a lot of the elements of the current staking procedure in order to meet more client needs. And I'm very proud of what we come up with, and we're looking to go live with this year. And then I think this will spark a lot of growth also from the yield side. And I also see further use cases in asset management with this, right? So there are other kinds of asset management products and services besides the e-asset management solution that we just launched, where I feel there is a chance for this, for cryptocurrencies to be part of, and we will have a lot of work ahead of us, obviously, but we have that on our radar.
Huh? Very good. So you have big plans into the future. Very, very good to hear. Alex, thank you so much for joining us today. We're already at the end. What stands out is that Post Finance isn't treating crypto as some sort of a side product, it's treating it as an asset class that belongs inside a managed portfolio. That's a novelty in the market. It's a meaningful shift for retail banking, and it'll be very interesting to see how other institutions respond to this. I'm sure they're discussing or have been discussing after your announcement. That's it for this episode of Beyond Infinity. If you found this conversation useful, please hit subscribe so you don't miss what's coming next. And if you have questions, feedback, or guests you'd like us to feature, please drop them in the comments below. I'm Andy Flury. Thanks for watching, and we'll see you in the next episode.